you continue to see that policy divergence, the outlook when it comes to rates, when it comes to inflation expectations, driving even more weakness in the yen?
Yes, look, I think in the short term, we do expect the yen momentum to continue, looking at that, touching that mid 140 levels. Look, volatility is really low. I think investors are probably taking advantage of the carry trade as we see, the terminal rates in the UK, Europe, continue to move higher. And that differential continues to widen in favor of, or out of favor of the yen in the near term. Of course, over the longer period of time, we do expect at some point we will see some sort of a strengthening and narrowing of this differential, and that's probably an end of year story.
What will happen to the dollar tomorrow, Mahjabeen, when we hear the Federal Reserve Chair on Capitol Hill? Is he going to reiterate hawkish comments, and is that going to spook the market?
Yes, I think so. I think he will come out and try to sort of remain hawkish. We do have already one rate hike priced in. If for some reason we see continued improvement in the PMIs this week, we have seen, home starts in the U.S. coming out again very strong, which sort of gives us the indication that the Fed may have to do more. We think there is upside risk to our expectation of the rate hike, one rate hike in July, and possibly more ahead, depending on the data that we see.
We haven't seen those hikes make massive effects on the US dollar, right? It's been quite stunning, actually. We've seen plenty of effects in the rates markets, but not quite on the US dollar. Is there going to be one?
Look, I think it's interesting. I think in the earlier part of the hiking cycle, we saw FX be very, very sensitive to the rates market. Coincidentally, as you rightly said, the sensitivity of, interest rate expectations or yield movements to FX has decreased. There's been a bit of a diminishing trend. And I think now, as most central banks reach the end of their hiking cycle, I think the currency will be driven more by growth differentials rather than the rate side of things. I mean, we have the BOE this week, where markets expecting a much higher terminal rate than many of the other economies, but that's not really reflecting in the sterling, is it? So I think that's the growth differential story that's playing out there.
Are we entering now an era when the possibility of intervention becomes something that we need to watch out for, particularly pertaining to if we get to levels in the yen that, would be seen to warrant that intervention?
Look, I think with the yen last year, we saw intervention the first time around at mid-40s, 146 or so. But, despite that intervention, you could argue how effective that was because the dollar yen actually went up to reach that 150 mark thereafter. So I think we'll have to wait to see whether the BOJ steps in, for the dollar yen to move from that 141, 142 mark to that 146. Really, we need to see that yield differential between the Fed and the US to widen more. I think that will be dependent on, of course, data, the PMIs, and more importantly, Powell's testimony as well. I think that's just a little bit of a key driver, which might just take it up, and then we have to wait to see whether the BOJ will step in.
So, Mahjabeen, give us your favorite pair over the next, quarter or so.
Look, I think with currencies looking at really having a convicted view on the dollar, while in the short term we do think the dollar may strengthen a little bit. We've done some work to see how the dollar, behaves post a rate hiking cycle or at the end of a rate hiking cycle. And our work has shown us that, 1 year into a pause or 1 year into the end of a rate hiking cycle, generally we see a weaker dollar. I think that will probably play out towards the end of the year into 2024. And that's where we believe the dollar will go relative to the other major crosses.